Good morning, guys. Welcome to my channel, Learn Accountancy with Prasada. So today we are going to discuss accounting equation. So let us understand what is an accounting equation. The accounting equation between it shows the relationship between assets, liabilities, and capital. Okay, guys. So accounting equation it shows the relationship between what assets, liabilities, and capital. And the formula for accounting equation will be assets equal to what? Liabilities plus capital. Assets equal to liabilities plus capital. So let us understand why it is important, guys. Whatever the business owns, we have something on the asset side. Whatever the business owns, the assets which is owned by the business, how that assets is funded? That asset is funded either by taking a loan or a liability or through own capital or through own capital. This is the ways in which the assets of the business are funded. So, and every accounting entry always have a debit and a credit. Okay. So this accounting equation will always balance. Assets will always be equal to liabilities plus capital. We will be understanding this with the help of examples when we move forward. Okay. So the basic idea of forming this equation is the business will be owning lot of assets in their balance sheet. If you see the asset side of the balance sheet, it will be either funded through a liability, which we call it as a loan, or it will be funded through a capital, which is in the name of capital. Capital means the amount which is invested by the owner of the business to run the business. The funding by the owner of the business is called capital. And any external funding, we call it as loan or liabilities. So assets will always be equal to liabilities plus capital. Now let us try to understand more in detail what is an asset, guys. What is an asset? What is an asset? The asset is resources owned by the business. It can be cash, it can be stock, it can be cash, it can be stock, it can be furniture, it can be debtors. Okay. And what is liabilities? Liabilities is any amount which the business is owing to the outsiders. Owing to the outsiders. It can be in the nature of loan, any loan taken from bank. It can be if you make a credit purchase, the creditors will also form a liability. If there is any outstanding expenses which needs to be paid in the business, like outstanding salary, outstanding rent, all this will form under the category of liability. Capital. Capital is very simple, guys. Owner's claim on the business. Whatever amount, if I am the owner of the business, I have invested some amount in the business, that will be called as capital. Okay, capital is the amount invested plus once I invest the amount, I expect some profit or losses. So any profit will get added to this less any drawings. If it is a loss, it will be deducted. It will be deducted. Clear, guys? Now, again, accounting equation, why it balances always? The reason why it balances always is the reason why it balances always is assets will be always equal to liabilities plus capital. What do we mean by this? What do we mean by this? The assets of the business will be always equal to liabilities plus capital. See, every transaction that we do will always have dual impact. Okay, so we follow a double entry system of bookkeeping. So there will always be a debit and there will be always be an equivalent credit, or there can be a plus in debit and a minus in debit also. When we discuss the accounting equation, I will be taking you through what is the concept of this equation. So let us take an example, guys, to make things more clear. The first accounting equation that we are going to do is Harish commenced business with cash. Harish commenced business with cash 1,50,000. Now, when I was discussing about golden rules and modern rule, I told you that there are two accounts which are involved to form an entry always. Okay, so here let us understand which are the two accounts which are involved. One is cash, another is capital. Another is capital. Okay, one is cash, another is capital. Okay, so when we form an accounting equation, asset equal to liabilities plus capital, what will happen? My asset will increase. Which asset will increase? Cash. Okay. And another side, my capital will increase. My capital will also increase. This will increase and this will increase. So my accounting equation will be cash 1,50,000 and capital will be 1,50,000. Clear, guys? Let us see how the presentation in real for this will look like. Harish commence business with capital. So the format for accounting equation will be transaction. You have to record the transactions. Then whatever assets or liabilities are getting added one by one, you have to name it. So here in this case, we had cash. So we will form a new column called cash and we will form one column called capital. So two places the recording will happen 1,50,000 and 1,50,000. See, the number of column will depend on the number of journal entries, the kind of journal entries that we are getting. Clear, guys? So first accounting equation, Harish commence business with capital of 1,50,000. Increase cash by 1,50,000 and increase capital by 1,50,000. So this will be this portion. This portion will be assets will be equal to, this is liability, this will be equal to capital. Okay, this is the first accounting equation, guys. Now let us see the next accounting equation. Furniture purchased for cash 20,000. Again, two accounts are involved. One is furniture, another is cash. Okay, let us see the accounting equation, guys. So in cash, what we will do, what will happen to the cash? The cash will decrease by 20,000. So we will decrease the cash by 20,000. It will decrease. And another asset called furniture. So we'll include one more asset. See this, as and when a new asset comes, you have to include that in the column. So this was the first asset introduced. The second asset introduced will be furniture. So introduced a column called furniture and add 20,000 in this. So minus 20,000 plus 20,000. Both impact is happening in the assets category itself. Clear? So my new equation will be cash I had 1,50,000 minus 20,000. My new equation will be cash 1,30,000. Furniture will be 20,000 and my capital will remain intact at 1,50,000. So assets equal to liability. We don't have anything as yet and capital will be 1,50,000. Purchase goods on credit. Purchase goods on credit. Okay. So what will happen in this case, guys? When we purchase goods on credit, my asset will increase. Stock, which asset will increase? My stock will increase, and my liability, I have to pay to the person from whom I have purchased in credit. So he is called as a creditor. So two accounts will impact. One is stock, another is creditors. Stock will fall under assets and creditors will fall under liabilities. So my new accounting equation will be, after every accounting equation, you have to create a new accounting equation. The new accounting equation will be 1,30,000 cash. There is no change in cash because of this transaction. Assets, we have furniture 20,000, no change in furniture. One more asset got introduced, which is stock 25,000, and creditors, a liability, new liability got introduced 25,000, and capital will be 1,50,000. No change in capital. Clear? Now take carry forward the previous balances. This previous balances are coming from the previous slide, guys. I'm just carrying forward the previous balances. Okay. Next transaction is cash sales. See, where cash sales and there is a profit of 4,000. Clear? There is a profit of 4,000. Remember, guys, In this accounting equation, we don't have a column called income or expenses. Anything which increases the profit, anything which increases the profit will be added to the capital. Anything which decreases the profit, anything which increases the profit will be adding to capital, will be adding to capital. Okay, guys, add to capital. Anything which decreases the profit, okay, will be reducing from capital, decreasing the profit, or we can call it as loss also. Clear? So cash sales, because of cash sales, what will happen? My cash will increase by 40,000. Okay, my stock, I had a stock of 25,000, 10,000 stock will decrease, and my profit will increase by 4,000. Here it is clearly given cash sales that includes a profit of 4,000. If the profit is 4,000, how much worth of the goods I would have given away? Very simple, guys. 14,000 is the sales minus profit 4,000. So 10,000 worth of goods I will give away. Clear? So I am getting a cash of 14,000 by giving away my goods of 10,000. So my profit will be 4,000 and this profit will be added to the capital. Clear? So my new accounting equation will be 1,44,000 cash, furniture no change 20,000, stock 25,000, it will decrease to 10,000, creditors no change, sorry, creditors there is no change 25,000, and my capital will become 1,52,000. Capital is changing because of the profit. Additional capital introduced 20,000. Two accounts which are involved is cash and capital. So my cash will increase from 1,44,000 another 20,000, and my capital will increase 20,000. Accounting equation, the new equation. After every equation accounting entry, you have to pass a new equation. 20,000, my cash will become 1,64,000. No change in furniture, no change in stock, no change in creditors. Okay, and my capital will change from 1,54,000, it will become 1,74,000. Clear? Commission received in advance. See, what is commission received in advance? We have to understand the nature of the transaction. One is I will get some cash. I will get some cash. So my cash will increase by 2,000. But what is something received in advance? See, whenever we get an amount in advance without giving any service, so this commission received in advance will be in the nature of a liability. So my this commission, this creditors and this commission, both will be a liability. Why it is a liability? Because I am getting a cash today without giving any service. I have to provide a service in the future, right? For this advance that I am receiving, I have to provide a service in the future. So this will become a liability for today. So my accounting entry will be cash account debit, cash account add cash, and commission advance will come under the liability, increase the liability by 2,000. My new accounting equation will be 1,66,000, furniture 20,000, stock 15,000, creditors 25,000, commission advance 2,000, and capital will be 1,74,000. Clear, guys? Now carry forward the balances from the previous slide. These balances are getting carried forward. Paid to creditor to 22,500 against full settlement. How much creditors I was having, guys? 25,000. Now I am paying this creditor. Entire creditor is getting settled. Entire creditor is getting settled by making a payment of only 22,500. See, when I am settling a creditor worth of 25,000 and making a payment of 22,500, what will happen? I make a profit of 2,500. And whenever there is a profit, that will increase my capital. Okay, so what will happen, guys? Creditor will reduce by 25,000. Cash will come into my hand. Cash will also decrease by 22,500. So 25,000 creditor, I'm paying only 22,500. So I get a profit of 2,500. So this profit will be added to the capital. This is nothing but discount received. I have mentioned here, this is nothing but discount received. So new accounting equation will be, guys, 1,43,500 Furniture will be 20,000, no change. Stock 15,000. My creditor will become zero because everything is paid off. Commission advance, this is a liability, liability which we discussed in the previous slide, 2,000. And my capital will increase to 1,76,500. Clear? Again, next, very interesting. Same perspective you have to give for the next question also. Sold goods costing rupees 15. Cost of the gold is 15,000, but I am selling for 18,000. Something which is worth 15,000, I am selling for 18,000. What will I do? I will get a profit of 3,000. A profit of 3,000 rupees will be added to the capital. My stock will be reduced by 15,000 and my cash will increase by 18,000. So three accounts are involved, guys. Cash account, stock will be reduced by 15,000 and 3,000 rupees. 15,000 worth of item I am selling for 18,000. 3,000 will be included in the profit, which will get added to the capital. This is nothing but a profit. Depreciation on furniture at the rate of 20%. I think if you remember, we purchase furniture at the rate of 20,000, guys. Okay. So we have to depreciate the furniture. When I depreciate the furniture, there is an expense of 20,000. Depreciation is an expense. This is nothing but depreciation. This is nothing but depreciation. This is nothing but depreciation, which will reduce my profit by 2,000 rupees, and my furniture asset will also get reduced by 2,000 rupees. Accounting entry, if I have to form the accounting entry will be depreciation account debit to furniture account. Okay, so depreciation will reduce my furniture, and depreciation is an expense which will reduce my capital also. So the new accounting equation will be 1,65, 1,500, 18,000, and here it is 2,000 and 1,77,500. So if you see my asset, the total of assets will be how much? 1,79,500 equal to assets equal to liability of 2,000 rupees plus capital of 1,77,500. So my assets will always be equal to liability plus capital. Clear, guys? This is all about accounting equation. Okay, so always remember, guys, assets will always be equal to liabilities plus capital. Clear, guys? Just to summarize, there is no equation which involves an expense or income. So anything which is an expense will decrease the capital, and anything which is a loss also will decrease the capital. Anything which is a profit will increase the capital loss. Accounting equation is asset equal to liabilities plus capital. You can connect me with in YouTube at Learn Accountancy with Prasada, and also my LinkedIn handle is Prasad Ramachandran. Thank you, guys.